Hey traders, it's John Fortune here with this week's Weekly Forex Forecast for the 7th of September to the 11th of September 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. And we're also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we were looking for further declines in this market down into the 91.99, and we did take out the target set from last week, and we bounced from this key area of support highlighted in last week's video. This sell-off to the downside does look to have completed a potential ending diagonal pattern. So 1, 2, 3, 4, 5. The key thing to note here is that ending diagonal patterns tend to precede reversals, but the key word here is tends to. They do not always precede reversals, they just show the market is starting to lack momentum, but the market has not yet reversed. And in fact, I've seen a number of times in the past when you have this type of ending diagonal pattern, any failure to reverse to the upside here, let's say if we're coming down, so an ending diagonal in a downtrend, and you fail to actually reverse, what happens is if you take out the lows down here, the market tends to accelerate to the downside because there are people trying to pick the bottom here. They place their stop losses here, and if they've bought and they place their stop losses, which are sell orders, what happens is when they get taken out, the market accelerates to the downside because you have all of the people who tried to pick the bottom here covering their long positions, so they go short, and then you have breakout traders entering as well, and they go short, and you end up getting an accelerated market to the downside. So the key thing here to note is that the market has not yet reversed. We are still in a downtrend, but this simply shows us that we are lacking momentum. Very simply put, because of this, going into next week, overall, I do still have a bearish bias on the dollar, but because of what we're seeing here, it is kind of a bearish to neutral bias. We could be in for a reversal, or we could even be in for a short-term correction. So as a result of this, I do go into next week with a bearish to neutral bias on the dollar index, and all that simply means is I'm going to be prepared to trade the markets on their own merits without a strong bias in the dollar one way or the other. So I'll be looking to trade the markets as they are currently structured without a very strong bias in the dollar one way or the other. The next market we're going to look at is crude oil. Now, last week we came within about 10 pips of our target up in this area, and we started to sell off to the downside, and you can see this was lacking momentum, and then we started to sell off. Very simply put, going into this week, I do favor short positions in crude oil if the opportunity arises. Any pullback towards the 42.63, any pullback in this area next week is simply going to be viewed as an opportunity to start to look for bearish setups in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at a 38.48. And if we can get a breakthrough here, I'm going to be looking down towards the next key of support to the downside and target 2 at a 36.59. So next market we're going to look at is euro dollar. Now, last week we were looking for further advances to the upside in this market, and we did have a nice rally to the upside, and then we reversed at the 1.200, which was right when the DXY traded into that key area of support and started to bounce to the upside. We also have here what looks like an ending diagonal in euro dollar. It's just the inverse essentially of the dollar index. So very simply put, going into next week, we have not yet reversed again in the dollar index or in euro dollar. So long positions are still the preferred setup of choice next week. We are sitting at the 1.17990, which is a key area of support. So going into next week, this is now a great place to start to look for bullish setups in this market. And if we can start to get a reversal from this area, if we can start to break to the upside here, this is going to be a great chance to start to look for a long opportunity. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 1.2050. So the next market we're going to look at is pound dollar. Now, last week we were looking for further advances to the upside, and we took out the target at the 1.3364, and we came very close to achieving our second target at the 1.3512 before reversing as the dollar index traded into that key area of support. Very simply put, going into this week, we are still looking for further advances to the upside in this market, and I do favor long positions in pound dollar. We've started to correct already, so this is simply being viewed as another opportunity to start to look for bullish breakouts to the upside. And if we start to reverse in this area, we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set the 1.3512. You can see also we do actually have a bit of momentum in pound dollar as opposed to euro dollar, for example, which just keeps failing at the highs. So I do prefer pound dollar as a market going into next week over euro dollar for that reason. The next market we're going to look at is US dollar yen. Now last week we highlighted the 106.27 as a key area of resistance to the upside to look for a pullback into this area. We have had a nice pullback into this area, and as a result going into this week, this is now a great place to start to look for a bearish reversal to the downside. If we start to break out to the downside, this is going to be a great opportunity to start to look for short positions in this market. We're going to be looking at initiating shorts down towards the next key support to the downside, the target set at the 104.70. If you want to take a conservative target for next week, you can take this low down here at the 105.20. So next market we're going to look at is Aussie dollar. Now last week we highlighted the 0.7386 as a key area of resistance to the upside, and you can see we did take out this target and we started to sell off once we traded into this target from last week. Very simply put, going into this week, I do still favour long positions in this market, and we do have some nice momentum to the upside. So again, I would preference this market over, say, euro dollar, where we're having a struggle breaking through those highs. This pullback is now simply viewed as another opportunity in this market to start to look for bullish setups. And if we start to break out to the upside, this is going to be a great opportunity to start to look for long positions. I'm going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at 0.7475. Just bear in mind, because we are starting to lack a bit of momentum in the dollar index, if you want to aim for a conservative target at the previous high, there's nothing wrong with that this week at the 0.7420. So next market we're going to look at is New Zealand dollar. Now last week we highlighted the 0.6756 as a key area of resistance to the upside, and we traded into this key area of resistance, into the target from last week, and we started to pull back. Going into this week, therefore, this pullback is simply viewed as another opportunity to look for bullish setups in this market. Again, you can see we're breaking to the upside here with momentum. We're breaking above previous highs with more conviction than we were in the euro dollar. So any further pullback in New Zealand dollar next week is simply going to be viewed as another opportunity to look for bullish setups in this market. We're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 0.6825. So next market we're going to look at is US dollar Swiss franc. Now these are levels from last week. We were looking for a sell-off into the 0.9000, and you can see we reversed after taking out the target almost to the pip, and we started to rally to the upside last week. Interestingly, going into this week, we did have a near-term reversal in the US dollar Swiss franc, and we could be potentially forming an inverse head and shoulders. As a result, you can see this market is structured with dollar strength, and this would be a market to come to if you wanted to, say, play a synthetic hedge next week. So if you're taking a dollar short position with a 1-to-2 risk to reward ratio, and you take a dollar long position with a 1-to-2 risk to reward ratio, and one of them is a winner and one of them is a loss, you still make money. That is the theory behind synthetic hedges. But this would be the type of market you could do that with next week. Any pullback towards the 0.90530 is going to be viewed next week as an opportunity to start to look for bullish reversals in this market, and we're going to be looking at initiating longs up towards the next key area of resistance to the upside of the target set, the 0.9197. Again, if you only want to look at US dollar short positions next week because the dollar index is in a downtrend, that's perfectly fine as well. It's just another option, another arrow in your quiver for next week. So the next market we're going to look at is US dollar CAD. Now last week we started the week in this area and we were looking for a sell-off down towards the 1.29520. We did have a nice sell-off, and then we started to bounce as we bounced in the DXY. Very simply put, going into this week, this pullback is simply viewed as another opportunity to look for short positions in this market. And any further pullback, we're going to be looking next week for a bearish reversal to the downside and a breakout to the downside. Any breakout to the downside here is going to be viewed as an opportunity to once again look for bearish setups in this market. We're going to be looking at initiating shorts down towards the next key area of support to the downside of the target set at the 1.2952. You can see this key area of support as well is a dashed line. It actually shows that this is more significant than the dotted lines or the dotted key areas of support and resistance. And this is just another thing. It's just the markets seem to be suggesting that there may be at least one more down leg if there is going to be a reversal in the dollar. At least one more move down US dollar CAD, let's say to the 1.2952, and we're seeing this in a couple of other pairs as well. At least one more down before we do get that reversal. So just bear that in mind. Again, I'm not trying to pick a bottom here, and it would be foolish to do so. It's just another piece of information, another observation that I wanted to share with you going into next week. And last but not least, we have gold. Now, the uptrend in gold overall is still intact, and as a result, I do favor long positions in this market going into next week. Any further pullback towards the 1898.77 is simply going to be viewed as another opportunity to look for bullish setups in this market. And I'm going to be looking at initiating longs up towards the next key area of resistance, the upside target set at the 2014.32. Now, just something to bear in mind with gold going into next week is we really haven't moved anywhere over the last few weeks, and there's nothing to say that this lack of volatility could not continue into next week and the week after. So just something to bear in mind if you are looking to trade certain markets next week. I would probably prefer some of those we looked at earlier on, some of those markets with momentum, rather than gold, which at the moment is kind of just chopping around and not really going anywhere. So I do favor long positions in gold, but in terms of preference, it may be better to look at some of those with momentum that we looked at in this video over long positions in gold, which, as I say, may continue to correct going into next week. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a nice weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.